President Muhammadu Buhari optimistic Nigeria is closer to self-sufficiency in liquefied petroleum gas production. Pressure on income may limit household investments in education, says National Bureau of Statistics. Nigeria-South Africa bilateral trade hits $8.2 billion yearly. And the program today is focusing on how the Nigerian stock market has fared so far and the outlook in 2021. It's Business Express and it's reaching you from Nigeria, Abuja's capital. Rather, I am Muplang Dakok. It's always a pleasure having you tuned to NTA's Business Express. President Muhammadu Buhari has said Nigeria has moved a step closer to the nation's dream of full utilization of the nation's abundant gas potential. The president stated this yesterday at the inauguration of the Oredo Integrated Gas Handling Facility and LPG processing and dispensing plants operated by the Nigerian Petroleum Development Company, an upstream subsidiary of NNPC in Ologbo, Edo State.
That have translated those plans into tangible projects with monumental value additions to the Nigerian economy. I commend the Nigerian National Petroleum Corporation for completing this project that is surely supportive of this administration's drive to bring prosperity and comfort to the Nigerian people. The Integrated Gas Handling Facility project will also support the ongoing drive towards providing alternative auto fuel under the Natural Gas Expansion Program initiative. This project will create hundreds of direct and indirect employment opportunities for our teeming youth, both skilled and unskilled.
On his part, the Group Managing Director of the Nigerian National Petroleum Corporation, NNPC, Mele Kyari, said the project was anchored on the President's commitment to harnessing the country's abundant natural gas reserves to diversify the energy portfolio, accelerate economic growth, and increase revenue generation capacity. The National Pension Commission Tuesday disclosed that due to the COVID-19 pandemic, it was unable to carry out the annual fiscal verification and enrollment exercise of the employees of Treasury-funded MDEs of the federal government that are due to retire from service between January and December 2021. It, however, stated that it has begun the process to automate the verification and enrollment process, with prospective retirees choosing between the self-assisted or the pension fund administrator-assisted option. Disclosing this in a statement in Abuja, the management of the commission added that the exercise is scheduled to commence within the first quarter of 2021. Now, 10 stockbroking firms in the Nigerian capital market traded 1.031 trillion worth of shares from January to November 2020. Data obtained from the Nigerian Stock Exchange on broker performance report in the first 11 months from January 2nd, 2020 to November 30th, 2020 showed that the 10 stockbroking firms traded 54.25% of the total value of stocks exchanged in the review period at 49.74% in terms of volume. Further analysis of the performance in volume terms shows that the 10 stockbroking houses pulled a total of 86.532 billion shares. The stock market has recorded a year-to-date gain of 29.97% as at November 27, 2020, despite the COVID-19 pandemic that has affected the economy. And joining us virtually to discuss the happenings in the Nigerian Stock Exchange is a senior economist and head research and strategy, Greenwich Merchant Bank, Ayodeji Ebo. Thank you so much, Mr. Ebo, for joining us on Business Express at this time.
Good afternoon. Thanks for having me.
Okay. So worthy of note is the fact that the NSE started out as one of the best performing equities in the world at the beginning of this year. But of course, because of the COVID-19, it now sank back into bearish territory. With another threat at hand, where is the market now? That's talking about the threat of another wave of COVID-19. How is the market right now?
Okay, thank you. You are right that we started on a very strong note this year. Our market later dipped to about 20% negative before coming up as of today is about 45% year to date. And there's the structure or the dynamics of the market we feel has also changed. When you look at the foreign participation, foreign investors data, you'll discover that domestic participation has increased with almost about 60% of the total market, which has also changed the dynamics. So in March, if we look back in March, during the announcement of the COVID-19 in Nigeria, the restrictions, we will discover that foreign investors were pulling out in droves. But what we currently, with the dominance of retail as well as institutional domestic investors, the dynamics has changed, and most investors are holding on to their position ahead of declaration of dividend in the first quarter of 2021. And that's why, despite the news of the second wave of COVID-19 pandemic, we haven't seen that major shock in the market. So the investors, the local investors, are holding on to their position. And the foreign investors, for those that wanted to pull out or that wished to pull out, for most of them had also pulled out. You would also recall that there were also FX liquidity early this year. So for some of them, have also tried to reduce their position to Nigeria. So by and large, market has performed significantly well this year. Year to date is about 45%. And looking at it by sector, the industrial goods sector has performed the most and has gained about 77% year to date, which is also very commendable.
Okay, let's look at the closing figures for today. The market advanced by 2.40%. That's meaning that it's closed positive today. Market capitalization rose to 20.2 trillion naira. We saw a 8 to 9 trillion naira within the week, but today we have 20.2 trillion naira. Is it because, just like you said, investors are holding on to, their gains?
Okay, thanks. If you look at the market, even looking at it for this week, there are few stocks that have been moving the market. So for Monday and Tuesday, Dangote Cement has been the major mover based on the news on the share buyback that will be happening on the 30th and 31st of December. But what we saw today, the gains can be largely attributed to the gains from Airtel Africa and Nigerian breweries. So we feel there are a few stocks that have been pulling the market, but when you also look at the market breadth, which is measured by the gainers, total gainers and losers, you will still see that it's above one. It means that we have more gainers than losers. So the sentiment is still very positive, which is largely attributed to the low yield environment and investors willing to take on more risk, like you rightly mentioned. So we believe that this trend, even for the rest of the year, would also be sustained. yes, that doesn't rule out any attempt for profit taking, because as we approach the end of the year, portfolio managers would also try to rebalance their books in line with their trust deed. We'll also see proprietary traders also trying to book profits before the end of the year. So we also note that a lot of even domestic investors are also on the sideline waiting to come into this market, because there are limited investment options that can give higher return compared to what you get in the fixed income market. Looking at the stock market from a dividend yield perspective, with an average dividend yield of between 6 to as high as 12%.
Okay, there is this trend in the markets where, at the backdrop of the recent bullish trend, just 6 companies listed on the Nigerian Stock Exchange account for 71% of the market size, while a set of 15 accounts for about 90% of the entire market. Why is this so?
Yes, it's interesting that just about 15%, 15 stocks rather accounts for about 90%. And that's why even the activities in the market is not as significant as we expect. It's what we believe that this is currently being worked on, and we're hoping that in 2021 we'll get more listed securities. If you recall, earlier this year, or even in the last 2 years, Dangote Cement dominated the market, but with the coming on board of MTN, Boa Cement, Airtel Africa, they tried to dilute that dominance. And so we believe that what we expect is that we expect to see a market that will be reflective of our GDP. So when you look at our economy, look at those that agri sector that accounts for a major part of it is not well represented beyond Okomu Oil and Presco. We need to have them well represented. The oil and gas sector is not fully represented. We have just the downstream, yes, and okay, Seplat, which operates within the upstream space. So we need more representation. So we believe that as confidence improves, and with the local participation that we see, which will reduce volatility in our market when there are external shocks, that would also encourage more companies to list. And that brings up the issue of the accrued dividend that the government is also looking at, which is sending a negative signal to some of the quoted companies, because we know when those funds get into the government covers, it would be very hard to get them out when investors are trying to reclaim those dividends. So we believe that there will be consideration to see how more listings can be boosted to dilute that proportion of stocks that account for 90% of total stocks in the market based on market cap.
All right, talking about more listings, just like you said, if government should prioritize partial privatization of large public enterprises and get them listed on the exchange, do you see that boosting liquidity and then creating a more diffused market capitalization?
Yes, I think that is going to be a very good move, which we've always clamored for. We believe that if government is able to list some of these parastatals, and beyond even deepening the market, it also creates some form of accountability and transparency. So we'll be able to see how most of these parastatals are operating, how profitable they are, and it would change the game from just being public sector inclined to the private sector, and that will also reduce the cost of financing or budget allocation to those projects, and as a result will free resources for more capital expenditure, while these companies will also be able to run on their own. And it even gives some form of entitlement. So when you have Nigerians holding stakes in most of these public enterprises, there will be accountability. They'll be able to ask questions, and that support that would also be required, they will also be able to get that. So would be looking forward to that. I know the Bureau of public enterprise is working on seeing how they can list more list companies on the Nigeria Stock Exchange, and that would be well welcomed by stockbrokers.
All right, let's have your outlook for the year 2021, talking about the stock market.
Okay, thank you. For us, we feel that 2021 would be, for the equities market, would be a year of two halves. Given the continued low interest rate environment, we feel that we would see that the market also rally in the first half of the year. And as we were expecting that rates would also improve before the tail end of the year in 2021. And when you look at the correlation between the fixed income market and the stock market, which is negative. So we would begin to see reduction of participation in the stock market compared to what you have in the fixed income market, which would affect the return in the equities market. But looking at it sectorially, we believe that the telecom sector would continue to enjoy investors' sentiment, and that we should also perform in 2021. But we also need to note that the downside risk that we foresee is the ban of the registration of SIM cards. And when you look at the listed companies, we know the daily revenue, which has been estimated about 400 to 450 million. So based on those that are yet to register, is about close to 60 million mobile subscribers. So that is really going to impact that sector if that is implemented in February. Also looking at the industrial goods sector, we know that government has also allocated more spending to capital expenditure. Based on even the approved budget yesterday, we saw that increase about 500 billion to capital expenditure to about 4.1 trillion from 3.6 trillion. That is a major boost, and we believe that will be a major support for the industrial goods stocks. And the banking stocks, we believe they are always able to weather the storm. They account for over 50% of our total activity in the equities market. It's really going to be tough, where they will also be able to cover the low yield. Cover for the low yield environment will be more lending, which may also impact on negatively on their impairment charges. But we've also always known that the banking sector, the banks are always able to weather the storm. They are working seriously on cutting costs. With the COVID-19 pandemic, not all the branches are being opened. That for most of the banks have now begun to adopt more of the online banking, and that will also help. And with the holding structure of most of those banks that they've begun to adopt, that would really also help them to sustain their profitability in 2021.
Thank you so much, Mr. Ayodeji Ebo, for your time with us today on Business Express. We've been speaking to Ayodeji Ebo, Head Research and Strategy, Greenwich Merchant Bank from Lagos. Stocks in Asia Pacific were higher on Wednesday following new remarks from U.S. President Donald Trump surrounding the new COVID-19 relief package. Bosede Ebo reports.
European markets opened higher on Wednesday as investors hoped a Brexit trade deal could be reached amid concerns over the approval of a long-delayed U.S. coronavirus stimulus package. Stocks in Asia Pacific were higher on Wednesday following new remarks from U.S. President Donald Trump surrounding the new COVID-19 relief package. Shanghai Composite up 0.76% to 3,382.32. Hang Seng Index gained 0.86% as of its final hour of trading, and Nikkei also rose 0.33% to finish its trading day at 26,524.79. U.S. stock futures edged higher early Wednesday, largely recovering from earlier declines after President Donald Trump expressed concerns about the new COVID-19 relief package, which could delay the deployment of funds to struggling Americans. Dow Jones Industrial Average Futures implied an opening gain of 90 points. S&P 500 futures and Nasdaq 100 futures were also slightly higher. It was mostly positive for Africa's stocks, with South Africa's JSE Africa Top 40, Nairobi's All Share, and Tunisia's Tunidex posting gains. Boss Day Able, Business Express.
Now, port inefficiencies, high incidence of piracy, poor port environment, lack of political will, and inefficient coastline resources, among others, have been identified as setbacks to Africa's prospect of exploiting the ocean economy, estimated to be in the region of $4 trillion. The federal government in 2018 expressed its readiness to cooperate with other countries to advance Africa's blue economy. The Minister of Transportation, Rotimi Amici, at the inaugural Sustainable Blue Economy Conference in Nairobi, Kenya, said it is one of the primary objectives of the Economic Recovery and Growth Plan (ERGP) of the government and a major revenue alternative to oil. The Director General of the Standard Organization of Nigeria, Farouk Salim, said if harnessed, the blue economy has the potential to create both economic growth and development in Nigeria. He added that the economy would require competitive and efficient use of coastline resources and that Nigerian ports and maritime facilities are currently costlier to operate and manage than ports in other parts of Africa. In a related development, the Nigerian Ports Authority says it will float the electronic version of its call-up system in 2021, which is expected to clear the protracted traffic around Apapa ports and decongest the terminals of bulk cargoes. Managing Director NTA Hadiza Bala Usman announced the new development in Lagos. The year was turbulent for importers, exporters, clearing agents and other port operators as port access routes, which made entry and exit from the seaports become a Herculean task, which had led to losses of cargo and threatened survival of businesses around the seaports. Hadiza said the bad roadmark made truck drivers hang around the ports lobbying for cargo lifting, adding that with the e-call-up, the truck's parks are linked to the port locations and a truck can only start going to the port if it is called upon. She says the authority is working with the Lagos state government to create truck parks and designated areas in a bid to further tackle protracted traffic on port access roads. And on the commodity market, oil prices dropped more than 1% in Wednesday trade after an industry report showed an unexpected rise in U.S. crude oil inventories, and President Donald Trump rattled markets by threatening not to sign a long-awaited U.S. COVID-19 relief bill. Brent futures fell 71 cents to $49.37 a barrel, while U.S. West Texas Intermediate WTI crude futures slid 67 cents to $46.35 a barrel. Both contracts fell nearly 2% on Tuesday, already a second straight session of declines this week. Still talking commodities, gold prices on their own part ticked higher on Wednesday as weakness in the dollar offset worries about a U.S. stimulus deal after President Donald Trump threatened not to sign the pandemic relief bill. Let's see prices of gold and other commodities. The National Bureau of Statistics says the pressure on income might limit household investments on education and health services for family members. In its COVID-19 National Longitudinal Phone Survey NLP for October 2020, the Bureau stated that its household income continues to be precarious. This may limit the investments households that are able to make in education and health services for their family members. The survey revealed that while 87% of respondents who were working remained stable in October 2020, the sixth round of the NLPs provides further evidence that income remains precarious for many households. It says of the 84% of households that operated in a non-farm enterprise at any point in 2020, around 22% were not operating their businesses in October 2020. The vast majority of these non-farm enterprises that are currently closed had been open at some point since the start of the COVID-19 crisis, indicating that businesses that may have at some point resumed operations were not viable enough to continue. Now, before we go, let's see the exchange rate in the currency markets. And with that, we've come to the end of this edition of Business Express. Be informed that all previous episodes are available on YouTube on NTA's channel. You can also communicate with us on Twitter. The handle is at NTA News Now and the hashtag is BizX. Business Express returns Thursday at 9:30 a.m. I am Muplang Dakok saying keep thinking and doing business.